Have you ever wondered how much money you could borrow from a bank, specifically TD Bank? Maybe you're dreaming of a new home, planning a big renovation, looking to consolidate some debt, or even just need a little extra cash to get you through a tight spot. Understanding your borrowing power is a crucial first step in making those dreams a reality, and today, we're going to break down exactly what goes into determining how much TD Bank might be willing to lend you. It's not a one-size-fits-all answer, and that's a good thing, because your financial situation is unique. The amount you can borrow from TD Bank, or any financial institution for that matter, depends on a few key factors that they carefully consider. Think of it like a puzzle, with each piece contributing to the complete picture of your creditworthiness. First up, and probably the most obvious, is your credit score. This three-digit number is essentially your financial report card. A higher credit score, generally above 700, tells TD Bank that you're a responsible borrower with a history of paying your debts on time. This opens the door to larger loan amounts and more favorable interest rates. Conversely, a lower score might limit your options or lead to higher borrowing costs. It's a good idea to check your credit score regularly. There are many free services that allow you to do this without impacting your score. Next, TD Bank will look at your income and employment stability. They want to see that you have a consistent and reliable source of income to comfortably make your loan payments. This means they'll typically ask for proof of income, like pay stubs, tax returns, or employment verification. If you're self-employed, they might ask for several years of tax returns to assess your income consistency. The higher and more stable your income, the more borrowing power you'll likely have. Your existing debts also play a significant role. This is where your debt-to-income ratio comes into play. TD Bank will calculate how much of your monthly income is already going towards other debt payments, like credit cards, car loans, or student loans. If a large portion of your income is already committed to debt, it reduces the amount of new debt you can realistically take on. They want to ensure you won't be overextended and unable to meet your financial obligations. The type of loan you're seeking also matters. Are we talking about a mortgage, a personal loan, a line of credit, or a business loan? Each of these has different lending criteria and, consequently, different maximum borrowing limits. For instance, mortgage amounts are often significantly higher than personal loan amounts because the loan is secured by a valuable asset, your home. Unsecured loans, like personal loans, typically have lower maximums because there's no collateral for the bank to fall back on if you default. Finally, your overall financial relationship with TD Bank can also be a factor. If you've been a long-standing customer with a good history of managing your accounts, it can sometimes work in your favor, as the bank already has a clearer picture of your financial habits. So, while there's no single number I can give you that applies to everyone, by improving your credit score, demonstrating stable income, managing your existing debt, and understanding the different loan types, you can significantly increase how much money you can borrow from TD Bank. The best way to get a personalized answer is to connect directly with a TD Bank loan specialist. They can assess your unique situation and provide you with precise figures and options tailored to your needs. With that said, thanks for watching, and until next time.